everybody, and welcome to VVP Trading. If you're new to this channel, make sure to subscribe and hit the bell icon to be notified of any new videos I upload to this channel. And if this is not your first time on the channel, welcome back. It's great to have you. So in this video, we're going to go over an important aspect of Forex trading, along with crypto and stocks as well. So in this video, we're going to go over identifying key zones, basically tips on key zones, how to identify them, how they should be used, what we should look for at key zones, and basically everything we need to know regarding these key zones to make sure that our trading is profitable and that our trading is efficient. So we're going to get right into it. I'm going to try to keep this video semi-short. If you have been on my channel, you see that I have some videos that are like 30, 40 minutes, some that are 8, some that are 10. Some things just have to, be gone over in full detail and full depth. So I try not to, skip through things and kind of give a full explanation, a full detail of everything. So first things first, what are key levels and how do we know where to find them? Where should we be looking for them? Because they're not necessarily always, previous lows, previous highs, because those previous lows or previous highs can be fake outs. So those are not always, the most accurate key zones and key levels. I'll go into full depth on how to find these key zones and to make sure that they're accurate and that you're using them the right way. So right here we have NZD USD, for example. This was a trade that I had gone in earlier. So if we go on a higher time frame, we are going to, if you see these solid black lines, these are my key levels. And if you watch my video on how to use TradingView, I went over in depth on how to basically edit these. So you put coordinates in here. I styled it a specific way, saved it as key levels. I have midpoint and then midpoint. So pretty self-explanatory. This is my midpoint because it is between my two main key levels. And then if you see this little dashed line, that is my midpoint. So I like to have them separate so that they're not all the same exact line throughout the graph, and I don't get thrown off. I'm not confused. So if you look, these right here, as I had stated, these are all whole numbers. Yes, they are decimal because the value of the comparison between NZD USD is not like 1.5 or 1.75. So we are in decimal. So it's 0.725, but it's not like 0.739624. It is 0.725. And if you look on higher time frame, price comes, and I'm going to use the different key levels also. For example, comes here, it respects it around this zone. So remember, it is not the line itself, but instead an area. So you would have a rectangle drawn here, comes here, respects this, comes here, also respects this, and then comes back up, retests here, consolidates within this sort of range here, comes back down, retest this twice, comes up here. So you kind of get the gist. So these lines are very accurate, they're very respected, and these lines I had put here months ago, like a long time ago. I have been trading this for a while, and as you can see, even with current price, they are still respected. And that is why I find these key levels and key zones very important, because not only does it work now, but it works in the future, it has worked in the past. You can always, backtrack and look. See, we even have here, price tested it multiple times. This wick right here almost came and tested it. Price right here, we have resistance, came back down, tested here. So also here resistance. So these zones are very accurate. And now let's go over how to place them, how to know where to put them. So here we can see that I could have put it, could have put my key level right here. But then if you go to coordinates, you see that it's not really any sort of significant whole number. Basically, you put 0.75. So if we look here on a lower time frame, we see that the midpoint right here kind of takes into account these values right here, and then we also have midpoint, which would be kind of about here, which would take into account this. But what I like to focus mainly on is these key levels and midpoint, depending how respected they are. Because if you look here, even though it's not key level, it is midpoint level, but it's very, very respected. It's tested multiple times. And as we see, this area right here is not really tested once. This is tested a few times. This didn't really test, it just broke. So these key levels, like I said before, they're not necessarily just a number. It is instead an area. As you see, I have a rectangle right here. So you want to be paying attention to what price is doing here at these rectangles. So take, for instance, this right here. We see that there's resistance. And if we see, because we are going to follow the continuation of the trend, if we see that there is bullish momentum, or that there's an indication for this correction, there's an indication to go to the upside, we're looking to get in for a long, for a buy. So these key levels, we want to make sure that we have confirmation to enter. It does not necessarily mean that just because it hits this key level, that's just going to go your way. No, you have to pay attention to what price is giving you. Price action is very, very important. So basically at these key levels, we can identify whether or not we want to be getting in or not. We can put buy limits, stop limits, what's it called? We can put stop losses, take profits, buy stops, sell stops. So key zones are very important. They're very useful because, for instance, right here, you get in here, you see that you're next. If you want to, scalp, or even, a quick day trade, you see right here that from midpoint to key level, you can say or take profit right here at this key zone, and then it'll take you out of the trade and you'll be secured with a gain right here. So these key levels, let's sum it up. So how to identify them? We look for previous highs, previous lows. We see what even number, kind of like a whole number, is next to that value that we can use, and then we find previous well-tested highs or lows. And as we see here, 0.725, and then we find in between of that. And then since we went 0.025, we do the same thing here, which is where we end up with 0.7, and then the math goes, so on. And these key zones we use to place buy limits, sell limits, basically buy stops, sell stops. You can put take profits to these key zones, because more likely than not, if there's going to be what's it called, a stop loss hunt, it is going to be going to that key level around here. So stop loss hunt will be like a fake out. So if you have your stop loss up here, if you're selling, it won't kick you out, and instead it will come back down and you will be secured and you will not lose that trade. So all in all, key level is very important. If you mix it together with all these different things that you have learned and that are taught, it is very efficient and very accurate. There are many different ways that you can use them. These are the ways that I find most useful. It just honestly is the best way, because it's just a lot more simple to see the graph. You see it in basically just like chunks. See from key level to key level to key level, and just kind of trade from there. If you want to do from a key level or a midpoint to this key level, you ever take profit here, just make sure it's reasonable take profit. Basically, tips for using these key levels. Do not assume that any small resistance, like right here, we have some resistance, but that does not mean that that is a key level. This right here could have been a midpoint, but it does not make it a very reliable key level, because as stated in my other video, you'll be trading in no man's land, and that's where your risk to reward becomes very, very small, and then you end up gaining less than you risk, or sometimes maybe a little bit more, but we want to be gaining at least 3 times more than what we're risking. You can create templates, as I said, right here. You create a template for which one, so that when I go into a higher time frame, I only see, except for this one for some reason, okay, so I only see my key levels, and I can kind of see where market is going, what it's doing. And as stated before, make sure you're watching for resistance at these key levels. You don't just want to set your buy limit at a key level and then hope that it goes back up your way, because in that case it could just break right through that key level and then hit your stop for 1.5% loss, and that's not what we want to do. We want to wait for confirmation and make sure that it is secure to get into the trade. Like right here, for instance, it's a trade I had gone into. It is not necessarily, it was not at key level. This right here was midpoint, which I had tested here, came back up here. You could have gone in for a trade here, but instead I waited for a break and retest around the key, around the midpoint. I could see I had my stop loss around here, but I placed it at the previous low, and then it is going up and we are in profit. This right here is a 1 to 6.3 ratio, a risk reward ratio, which is very, very well. It's sort of a scalp in a way. We see higher highs, higher lows, higher highs, higher lows. So this is very good to see. So to sum it up, this is how you identify key levels, midpoints, and midpoints. This is how you should be using them. You should be waiting for resistance at these levels. You want to make sure that you are not just marking any resistance as a key level or as a midpoint. If you put in your coordinates first and then see what price is doing, current price, then you will see, okay, maybe I should wait for price to come up a little bit more before I sell, wait for price to come down, and then I can get into my buy. Also, as I said, wait for resistance, wait for confirmation, wait for like an engulfing candle. If you are going in for a buy, don't just set your buy limit there and then go back to your platform and see that you have a loss of 1.5%. Set alarms right before your zone to be notified when price gets there, so that you can basically watch the graph, see what price is giving you. Is it resisting? But don't watch on like the 15-30 minute time. Like, make sure it's actually resisting and that there is true resistance, not just one candle on the 15-minute time frame, just one red candle. Like, you want to see true resistance, and then an indication to the upside, and that's when you want to be getting in. So if you found this video helpful, make sure to hit the thumbs up button, subscribe, and also hit the bell icon to be notified when I post more videos, which I will be posting more videos coming up shortly. Stay tuned. Take care, guys.